What's going on? Welcome back. Ryan here. In this video, we're talking about the debt cycle. Now, this is a complicated concept, right? In economics. And to simplify this, I'm going to use this little paint program, okay? And I'm just going to draw some stuff, okay? Right? So imagine this line right here. This is GDP, and this way is time. Okay, so when we think about the debt cycle, we think about something that looks like this, right? Where this line, this diagonal line represents growth, right? Growth. And this wave here would be long term debt cycle. Okay, so this long-term debt cycle can be, let's call this could be, 50 to 70 years, right? And this top point here is where we would have the most debt, right? The debt is the highest and the interest rate is the lowest. So high debt, low interest. Okay, right here. And this 50 to 70 year period is where the economy is growing, right? The government has lent money out, right? Interest rates are decreasing, but debt is approaching its high, right? And that would be a period what we would call is where we're leveraging, right? We're leveraging and growing using debt, but interest rates are falling. And then as we come to the end of that 50 to 70 year long-term debt cycle, what happens is, these things happen over very long periods, right? So no one's quite sure exactly how a particular economy is going to react with all of the different things that's happened. But over time, we've seen that this is the way the long-term debt cycle works, right? Where as we exit out of this high here, what happens is you have like debt restructuring, right? Where the government, is either printing money or they start to raise interest rates. And then that debt starts to go from high debt down to lower debt, where we have down here would be low debt with high interest. Right? So we go from high debt, low interest to low debt, high interest. And it's important to understand, right, that this is happening over a very long time. And while this is happening, we also have another line here, a squiggly line that's oscillating back and forth over this long-term debt cycle, okay? And what this is the short-term debt cycle, okay? And so we have these debt cycles, right? And they revolve around, right, how much debt there is, what the interest rates on bonds are, how much money the government has printed, right? The world and monetary systems can change drastically over time, in relation to these debt cycles. And especially if we're trading options, right? We have lots of tools, right? You could trade options on bond futures. There are ways to take advantage of these long-term, I would call this part of seasonality, right? The seasonality of the long-term debt cycle with relation to governments and monetary policy. And again, this is a very very dense subject matter, right? There's a lot of things that go into understanding and modeling and thinking about these debt cycles, right? Which is why you have hedge funds and banks that are spending billions of dollars to, understand and to calculate and to forecast how these markets are going to react. But for us as traders, no matter where you are on your trading journey, this is a very important concept to understand, right? Which is the long-term debt cycle. And then, there also being a short-term debt cycle, right? And a lot of this has to do with, the interest rates of the 2-year, right? The 5-year, right? The 10-year treasuries, the 20, the 30, right? Forgive my handwriting, I'm using a mouse. But I hope that this makes sense. I hope that that you go out and you continue to research this, because it's super dense, right? You could give lectures and dig into the math and really go very deep when it comes to talking about economics and debt cycles. But for us, and I'm going to relate this right now, that okay, we're coming to the end of 2021 and we're at historically low interest, and our nation has historically high debt. So in the long-term debt cycle, we're here. We're right here up in, we're up here in this area up here, right? And as history has shown, eventually what's going to happen is we're going to have to start coming down, right? Where the leverage and all of the outstanding debt is going to need to be paid, right? Not only by Americans who are carrying debt on their credit cards, but also businesses that are carrying debt with their lenders, right? So really important to think about debt cycles, short term, long term, and understanding where we fall in the debt cycle. So if you have any questions, reach out. I love talking about this stuff. And as always, I look forward to the next video.